Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, April 26th, 2011 is sponsored by Realtic. Again, we're going to get right into the market analysis here as we get started, folks. One thing I want to talk about is first off the rally that we're seeing in the market. What's the rally's cause here? Well, we had some good earnings this morning. I mean, that's no doubt about it, part of the reason for the rally today. There are some other factors. You had good earnings, that's number one. Second would be the weakness in the dollar. Dollar continues to slowly drift lower, not down that much today, but just a little bit of weakness is enough to keep commodity prices like oil, especially oil as we're seeing silver and gold sell off today, but oil inching neutral to positive. That's helping Chevron be up about $1. Exxon's also up about $1. And remember, Chevron and Exxon are key components of the Dow Jones Industrial Average, and if we flip to the Exxon chart, you can clearly see it's having a very, very solid day. Opened slightly positive on the Exxon chart here and has moved up very nicely ever since. And remember, as long as those are key components of the Dow Jones Industrial Average, they're going to have an impact on the overall Dow, which is going to make it go up when they're up, and therefore the market's being positive. So dollar weakness, a little strength in oil, that creates strength in the commodities trades like Exxon and Chevron, and that pushes the Dow Jones Industrial Average up. Another cause of the rally today would have to be the Federal Reserve meeting tomorrow. The Federal Reserve is doing their new policy statement style, which is an announcement at 12:30 p.m. Eastern Time tomorrow. And again, that's right during lunch, done on purpose by the Fed to make sure that the volume is as light as possible when they make their announcement. Then what happens after that 12:30 announcement, at 2:15 p.m. Eastern Time, Bernanke will come out, give some minutes from the meetings, give a press conference, and really key in on whatever the market's doing, and if the market's selling off, he'll probably say some positive things to buoy it back up. So it's really a control by the Federal Reserve to keep things in play, keep the markets from dumping out. That's the way most smart traders are looking at this new style of Federal Reserve announcement for the FOMC policy. Now remember, interest rates aren't going to go up, they're not going to go down. It's all about what they're going to say tomorrow, and it's going to be interesting to see how this whole new format plays out. So again, people are saying to themselves, well, we know Bernanke is taking more control of the meetings tomorrow, so therefore it's unlikely you're going to see any selling in the markets tomorrow because Bernanke just won't allow it. Therefore, we can buy it, considering he's most likely going to say positive things about the economy. And again, that's giving us another reason for the rally today. So there's really a lot. You have the dollar, you have the commodity stocks in regards to oil, you have the Federal Reserve tomorrow, and of course, you have the overall earnings announcements by the likes of 3M. 3M, if let's take a look at my Realtic chart of 3M here. And 3M's having a great day, up $2 on earnings. You also have Ford Motor Company, which is up about 38 cents on earnings this morning. You also have some other stocks as well, which are having very, very nice moves up on earnings in the Dow Jones Industrial Average, all right? So again, just to take a look, IBM actually was a key catalyst to the rally this morning as well, although it's pulling back a little over the last 30 minutes. IBM announced a dividend hike of 15% this morning, and that's also buoying the Dow up as IBM is up on the day. All right, so let's take a look at a couple other things here. First, let's go back to the SPY on an intraday now that we've covered the reasons for the Dow being up about 114 points, NASDAQ up 21, S&P up about 11.5. That's about 0.75% to about 1% today on the indexes. Now, the markets here started out slightly positive on the day. You can see a little bit of a gap up. You gapped up just above this blue trend line, but just below this next pink trend line, which is the 134.15 level. Now, the 134.15 level is a key resistance area on the charts, and that was actually the first short of the day I called out in the intraday stock chat. And remember, folks, you can take a free trial here of the Research Center or the intraday stock chat. It's a 1-week free trial. You have no obligation as long as you cancel before the free trial ends in 7 days. And again, you can try out these services. Yesterday, we nailed a huge trade in the Research Center on silver being short. That's continued to play out today. We've seen many, many other trades develop from the Research Center and the intraday stock chat where you can just make money hand over fist. And again, being a free trial, there's no risk, so you might as well step up and take it. All right, now again, looking at the spiders here, you can see the pinkish line right here, initial pullback. That was good for about 25 cents on the short side there. And then once we came up and hit it again and pulled back for the second time, the third time we broke through. You broke through, you confirmed, that means you're going to continue up most likely. Sure enough, you continue up to this next pink trend line, which actually happens to be the master double top. All right, it's a double top from, if you go back on the charts here, we'll go to the 60-minute chart and zoom out. If I zoom out here, folks, take a look. from this double top going back to the 18th of February. It's a beautiful little pivot high right there, and that's what you stalled out on an intraday basis right here. Now, what happened was many people would say, okay, we'll short this. Well, what I noticed as it was consolidating was that it was actually consolidating in a bullish flag type formation, which tells me it was going to go higher. And sure enough, this is your move up. It breaks through, and where does it go? It goes to my next shorting level, which was an even number play, which is a master proprietary technique utilized by members of the research center that we teach and in the chat room, and that's at a short level of a pierce of the 135 even number. You short that level, and sure enough, look at the pullback you've got. Now you're pulling back to a confirmed level of support now on the intraday. This is actually a buy right here. You have the 20 moving average and you have this trend line which you confirmed above. Therefore, the retrace here, you should get a small little bounce to the upside on the SPY off of this level for a little bit of a scalp. We'll follow it later in the video and check it out. All right, now let's go to a couple other things here. First off, as we said, you are having some good rallies across the board. There are some weak stocks out there that are a little bit concerning to me in regards to the strength of this market. And the number one stock on weakness that I have to bring to the attention of you guys is Apple Computer. Apple Computer actually hitting the lows of the day here. It's not down that much. It's only down $2.40, which on a $300 and $350 stock is not a lot. But the problem is you have to recognize that the markets are up sizably. I mean, you have the market, the Dow up over 100 points, and Apple's down. The NASDAQ is up about 1%. Apple Computer is down. So that's an interesting little weak characteristic here in this stock that does make me believe that it continues to try to top out in this range. And the stock, again, has just gotten too big. That's the problem. Anytime a stock gets too big, it always seems to come down. Like Microsoft got too big, and then the stock has kind of been in a lackluster performance for really the last 10 years or so. Cisco recently, if you look at Cisco's chart, Cisco was a monster on the daily chart for quite a while, and then lately, I mean, it's just the earnings just fell apart, the revenue streams fell apart, and look at what the stock has done. So these are former big runners. Apple's had a great move, no doubt about it. I respect that stock as much as any other stock out there. But the problem is, again, you have all the competitors just jumping on the bandwagon, trying to take control, trying to make money off what they do, and it's just going to eventually eat away at Apple. And that's my fear with Apple. So, again, you can't help but think that Apple, again, showing weakness today is somewhat of a bearish signal here on my real-tick charts. And again, yes, it's consolidating in a bullish manner, but you're still going to have major resistance up here on Apple and major resistance right in this area as well. A lot of resistance up here if it pops. Otherwise, the weakness today is somewhat of a bearish signal in my opinion. All right, what else do we want to look at? JP Morgan, Goldman Sachs, all having good days today. JP Morgan, this is actually an in spirit of bearish pattern off of a beautiful double bottom we nailed here. And again, this was a beautiful double bottom, so just be aware of that. But nonetheless, bearish flag pattern. I would say if it gets up to these two moving averages, that's your shorting opportunity there. Goldman Sachs has been in a very, very weak formation lately as well, coming down from the highs of 2011 all the way really to the lows of 2011 on earnings. It's getting a little bit of a bounce today, though, up about $1 on the day. Intel continues its sizable run up here. Intel, remember, reported earnings here. The impressive thing about Intel is actually taking out the 2011 highs on a pierce. Now, again, it hasn't confirmed above that level yet, but it is a very important possible close here if we confirm tomorrow and if we close above this level. Now, we'll watch very closely to see how that plays out. But again, just keep a close eye on what's going on here. And again, we'll follow it in the nightly video tonight in the Research Center. Again, remember, get a free trial. If you take a free trial of the Research Center, you get the hot charts and alerts. You get the nightly videos that I do every night, 30 to 40 minutes in length. You get the daily market reports with master levels on gold, oil, and the S&P, and along with many other things there. You get technical tactics. You get the Pro Trader watch list. I mean, it's just a ton of things included. And again, it's a free trial for 1 week, and then afterwards, if you decide to stick around, it's only $50 a month, $49.99 to be exact. So it's very, very cheap. And again, those of you that took the SLV yesterday in the Research Center, you know you probably banked $1,000 on that trade minimally if you just let's say you did 500 shares, $2, $1.50, $2, around $1,000, just on 500 shares short. If you did a normal position, which would be 2,000, 3,000 shares, you made enough for a lifetime of the Research Center, just on that one trade. Now, just think about all the other trades that are in there. And that's the beauty of it, all right? So in any case, just keep that in mind, folks. You have to utilize it properly. You utilize it properly, which we help you do, and you're going to make a lot of money in that Research Center. All right, by the way, folks, what did I just say? I said a small bounce on the bullish side right here on the SPY. Look at that small bounce coming in. I do think it might have a little bit more upside. But again, this is a confirmed breakout. Therefore, first pullback to the trend line is a buy. And sure enough, there you have it. 20 moving average also helps, by the way. It's a beautiful little chart right there, I have to say. All right, so let's go over a couple other stock charts here as we kind of come to the end of this video, which I want to keep you guys understanding of. Today, MasterCard continues its move higher, although it has pulled back off the highs. This is a beautiful move up. Look at this. Two red candles, tiny red candles, the whole morning up until about 12 o'clock. Now it's turning into being a lot of red candles, but if you go to your daily chart, this is a new breakout. In fact, let's go to the monthly chart. We go to the weekly, actually. If you go to these highs, take a look at this. This has actually been a breakout, and this is an interesting chart to say the least. Notice you started it here, connect through here, here, and look at the breakout right there. And that's a confirmed breakout. Granted, it's probably going to go to about 280 at this point before pulling back, but that is a beautiful little breakout of a trend line resistance that you can see on the MasterCard weekly chart. Very, very interesting there. In addition, what I want to just show you here as well, if you just take this line and just stretch it across here, you also have a little bit of a pierce of the 270 level, since we're trading at 275 on MasterCard, and that's above the connection of this pivot top and this pivot top as well, and that goes right across. You can see we are above that on the weekly as well. So it's actually been a bullish move on MasterCard. You got to believe ultimately the way this thing is trading, it has a decent likelihood of going to about 300 eventually, although again, I think it needs a pullback at this point back to 270 to retest that confirmed breakout level on the charts. But this is your next area on MasterCard at this point. All right. Scanning through my watch list, Amazon is down in $3.25. So it's interesting that Amazon and Apple are both selling off a little bit today. Let me just zoom in on the daily chart. Now, granted, Amazon's right down into the 20 moving average. So, I mean, that's going to be some support short term. But with a market that's as strong as it is, those are two major leaders that are showing weakness. In addition, one stock that reversed today is Baidu. And this actually could be a little bit of a short-term top in Baidu, I have to say. You had a nice move up. It was up as much as around $3 today and is now reversed to the downside, down about 75 cents. I'm going to watch this very closely. This stock, again, has had an amazing run over the last couple years, but it could be a short-term top. Now, all these keys, do I like it? Do I not? Do I take a trade? Do I not? This will all be available in the Research Center, so take that free trial now. Get involved, folks. I can't stress that enough. You want to make sure you take your 1-week, 7-day free trial of the Research Center or the intraday stock chat. And again, just to go up, and I'll just show you here, go back to start your 7-day free trial today. Go to In the Money Stocks, and you can see banners all over the place to take that 7-day free trial. All right, guys, enough said. Take care. Have a great afternoon, and I'll talk to you all in the Research Center this evening. We'll talk about some new trades. Take care.